for joining my email list. I'm glad that you're here and excited to give you more information on this factor cap topic of you can create an LLC and automatically deduct 100% of your living expenses just because you have an LLC. Unfortunately, we determined that that is cap. You can't just create an LLC and expect to be able to deduct your living expenses as a tax deduction. What an LLC is, it's actually a legal entity. It's nothing really related to tax purposes. The IRS doesn't actually recognize LLCs as a tax entity. That would, in the eyes of the IRS, if you have an LLC, that means you're a sole proprietor for tax purposes, unless you make some special tax elections. Just because you have this LLC doesn't give you necessarily any benefit, because the theory is you can just randomly create an LLC just for no purpose, just to be able to have these tax deductions. If you do actually have a legitimate business, though, there is room for some tax deductions there. So having a legitimate business, whether it's an LLC or just a DBA, it doesn't matter what you have. It doesn't have to be an LLC, as long as you have an actual business that you are providing a service or a product and your motivation is for profit, and there's other determinations there. But the way that you can deduct your living expenses on your tax return to give you some tax benefits is to, like I mentioned, to have an area in your home. It doesn't have to be a whole room. If you do have a whole spare room that you can use for your business, that's used exclusively, 100% exclusively for your business, that is the key here. If you were ever to be audited and you maybe use that room for a weekend guest, they will remove that deduction from your tax return. So make sure that it's exclusively used for business. It doesn't have to be a whole room, but that's great. It gives you more deduction and easier to just close the door and be like, this is my office. However, you can use like a corner in your living room or your dining room or your bedroom, having a corner somewhere, a space somewhere that you can separate from personal living areas. What I like to recommend is you can put like painter's tape down along the floor to kind of border out your space. You can also get like those standing like false wall, like changing room wall things that like are accordion. You can get those and like kind of stand it up around your area, so it secludes it, and it's clearly marked of what's your space for your business and what's not. Once you determine that space and you make that specifically and exclusively your space, you're able to figure out the square footage of that area compared to the square footage of your entire home or living area, and you'll get a business use percentage, whether that's 5% or 10% or 20%, and whatever that calculation comes up to be, you're able to take that for your living expenses as a tax deduction at the end of the year. So if it's 10%, you're able to take 10% of your rent, your mortgage interest, your property taxes, your utilities, your internet, your trash removal. And if you own your home, you're able to take your home depreciation, which is depreciation is basically taking a small chunk of the value of your home over an extended period of time, based off of that business use percentage. So those are all really great benefits to having a business out of your home. You are able to deduct some of those expenses. Now, there are some tips to make that a little bit more, a better percentage. Like you can, if you have one bathroom in your home that's used like universally for everybody in the home, you can deduct that space from the total square footage of your home because it's a shared space. So that would increase your business use percentage. The other thing you can deduct from your total square footage are like hallways and stairwells. So that way, again, it's kind of like you need those. Everybody kind of uses that space. So that might help boost your business use percentage. Another option too is if you are using a whole bedroom, you can use the bedroom percentage, bedroom ratio. So taking the total number of rooms in your house, so you say you have 10 rooms in total and you're using one, so that would be, is at 10%. So, you know, depending on how you do it, just kind of play around. You can play around with the different options and see which gives you the best option. Now, if you have a rental, like an apartment, maybe you have, so it's smaller square footage and smaller space, or maybe less expenses. So maybe your rent isn't too bad, which if it is, like, don't move because you're probably getting a deal. But you don't have the property taxes and maybe your utilities are included. So there's things that may go into this, but what I'm going to get to is that there is a safe harbor method, which is you don't have to keep track of all your expenses throughout the year, and you just automatically can take $5 per square foot up to 300 square foot. So the total deduction is $1,500, like it maxes out at $1,500. So that can help you in multiple ways. There's more to it, but that's the basics. If you want more of a consultation for your specific situation, reach out to your tax professional that you use and get more information from them about your specific situation, or feel free to schedule a consultation call with me, and I'd be happy to dive deep into this situation, the home office deductions, and we can talk about more potential deductions that you may be missing. Otherwise, thank you for being here, and I hope you found that helpful.